Welcome back. Today, I'm going to do a deep dive into Hyperliquid. You've probably seen people posting about Hyperliquid. It was like the biggest airdrop of all time. And the way they did the airdrop is extremely unique for crypto. So I dug through the ecosystem over the last week or so and put this article together. So I'm going to review everything in the article so you can decide whether or not it's an asset you should pay attention to. So Hyperliquid is an L1 launched by Jeff Yan, and he was a quantitative analyst at Hudson River, specializing in high frequency trading. And he built one of the biggest market making firms in crypto before leaving to focus on Hyperliquid. So Hyperliquid had this airdrop, and the way that Hyperliquid kind of approached the airdrop is very unique in a time when people are getting very, very irritated at VCs and diluted projects. So what he did was he self-funded this airdrop, and there was no VC allocations, no early investors. It was just the people that actually were the early adopters who got a massive airdrop. And there were people out there saying that they got a seven-figure airdrop from Hyperliquid. I don't know if you remember, it was in November of last year, and everybody was talking about it, but they basically over rewarded the early community. And why that's a big deal is because crypto is going through a dilution problem. And I'm going to explain to you why that is. So, when founders want to basically raise money in crypto, they have two routes to go. They have three routes they can go. They can bootstrap the project themselves, which is extremely hard to do because it's very tough to build and launch an L1. Even a crypto app, it's easier to bootstrap a crypto app, but it's still very, very hard. Or you can go the VC route and raise money from VCs. Now, how VCs basically, like, how they decide whether, like, how much something is worth, to put it simply, infra is worth way more than an app. If you're raising for infra, you could raise 50, 100, $200 million. If you're raising for an app, you might get $500,000, $1 million, $2 million. You have a very, very small runway. And because of that, you have a very, very small margin of error. But there's countless layer ones that have gone live and raised hundreds of millions of dollars and got basically no usage. And these founders are basically skating by on their initial runway. And the reason Hyperliquid is so celebrated is because they launched the app first, and then they're launching the L1 later. And the app is already doing crazy numbers, and some people think it could compete with like BNB chain and other centralized exchanges. So this app has already gone viral because of the airdrop, and it's already getting a lot of usage, and it's showing basically that you can self-fund, you can bootstrap a project and be successful. In the past, it would have been very, very difficult to do, but now all the tools are available to do that, and that's exactly what Jeff did. And when VCs basically invest in an L1, they're already up 5 or 10x. And if you want to talk about why that, let's just look at Sui as an example. So what happens is VCs get early allocations because they've built a network and they've built a reputation. And then they say, okay, I'm going to buy Sui. I'm going to give you $1 million to buy Sui. And then Sui says, okay, we'll give you a deep discount on the token. So by the time that Sui hits the market for retail to buy, VCs are already up 5 or 10x. And you can see it right here in the FDV. It's 3.5 times the market cap. So that basically means there's 25 billion worth of Sui that is left to be unlocked that VCs and early investors can dump on retail. Now, in this case, you have vesting. So when the founders go to VCs, they can be like, hey, we'll give you, 3% We'll give you a deep discount on the tokens, but you can't sell anything for 2 years, or you can only sell 5% a month for 2 years, because it gives, so they kind of manage the supply and control the supply, because there's countless examples of projects where the investors just dump as soon as they get their allocations, and it kills the price. And when you kill the price, it essentially kills all the momentum that they have built up, because price action in crypto is basically the best marketing you can get. If the price is going up, everybody's interested in your chain. They want to use your apps. When it's going down or it's going sideways, nobody wants to touch your apps. So with Jeff basically rewarding the community instead of rewarding VCs, it's built this rabid, diehard community that bull posts Hyperliquid all the time. I'm sure you've seen the tweets right over here. It's like they'll post something, even if it's related or unrelated, they'll end it with Hyperliquid. Okay. And some of these people made 7 figures. Some of them made 6 figures from this airdrop, simply for being an early adopter, generating volume, and just trying out the app. Now, beyond the airdrop, you see a lot of examples in crypto where an airdrop happens and the price nukes. I mean, look at Magic Eden. Okay, let's look at Magic Eden as an example. It's been down only since they had their airdrop. It's down like a crazy amount of money. What's the all-time high? Where is it? All-time high, $13, and it's at 171. So it's down about 90%. You look at Barachain, which literally just launched, okay, all-time high, $15, and it's at basically under $6. You look at Story Protocol, it just launched. And what was the high? I mean, this hasn't pulled back that much, but another example is Venice token, which was just airdropped recently. All-time high, basically $20, and it's sitting at $6. And a lot of these tokens never, ever recover. But Hyperliquid is up, what is it? 5, 6, 7x since the airdrop. So the all-time high was $35. The all-time low was $3.20. So it's basically 10x since the airdrop. And I remember this airdrop, and I was like, man, should I buy this thing? I was like, no, it's just going to dump like every other airdrop. But because they rewarded the community instead of rewarding VCs, it built this level of trust that a lot of these other protocols can't replicate. And that's what's so interesting about Hyperliquid, is because it's already generating revenue. Again, going back to the old crypto founder playbook with VCs, it takes a long time for them to start generating fees and revenue for the blockchain. And for Hyperliquid, it's already generating almost 600 million annualized, which is massive because this thing has only been out since November. So yeah, so basically they launched with the app. Now they're focusing, they're going to launch an EVM. They're going to launch an layer one, and it's basically focused on crypto trading, because the biggest product marketing fit in crypto is basically replacing the financial system. So making it easier for people to, conduct and finance, and removing, kind of like the walled garden of finance. Because in the past, before like, apps like Robinhood, for example, they used to think that younger people didn't want to invest, and it was an old man's game, and it was an old boys club and all that stuff. So people just didn't have many opportunities. And crypto's biggest use case is creating a level playing field with more opportunities, where people can basically take control of their financial destiny. Now, of course, that doesn't disclude it from rugs and stuff like that, rugs and scams. The legacy financial system has rugs and scams. So does crypto. But crypto still creates more opportunities, because anyone, anywhere in the world, it's basically a massive worldwide financial system, can download a wallet and start transacting on chain, versus hey, if you want to open up a bank account, you need good credit. And if you overdraft, you get all these fees and stuff like that. And we don't have to go into, how a bank doesn't really hold your money and they use it. Basically, a bank takes your money, you put it in the bank, and then they turn around and then they use it to make money. And then you don't really get a cut of that. Okay. So this is a big deal. So as far as like trading and creating a chain basically focused on trading, like high frequency trading, speed, ease of use, and everything. Hyperliquid has already captured a significant amount of attention and usage in a very, very short time. Okay. And their airdrop was bigger than Uniswap and DYDX. So they're building this EVM at the start of a massive shift in crypto, which is basically more and more people are using decentralized exchanges versus centralized exchanges. And they're at the very start of this trend, and they've already captured a significant amount of liquidity. And this comes at a time when people are getting upset at Coinbase for locking their accounts and Binance for being an insider's game. And instead of like being at an insider's game, they've rewarded the community, and they're going to reward them again with another airdrop, because another 35% of the supply still needs to be airdropped. And people are speculating right now that that could happen soon, but more people are comfortable using just a wallet. They don't want to use centralized exchanges. DeFi protocols have surpassed 200 billion TVL globally. And if we compare it to Binance, here, daily trading volume for Hyperliquid's 5 billion, Binance is 26 billion. Now, Binance is an 8-year-old company, right? But Hyperliquid is faster than Binance and BNB chain. They don't have as many cryptocurrencies, but their fees are much lower than Binance, and you don't need a KYC. I think you're going to need KYC eventually, but you're anonymous and you have privacy in your transactions where you just don't have at a bank. I went to a bank 6 months ago, and I don't remember if I was withdrawing money and they're asking why I was withdrawing the money, and I was like, it's really none of your business. And I think another time I went, I was depositing money and they asked me where the money came from. I was like, again, it's none of your business, it's my money. So Hyperliquid has already captured 32.4% of crypto derivatives trading, hitting 77 billion trading volume in December alone. And they generate fees every month, 24 million a month. In token auctions, 2 million a month. And yeah, so I already talked about the revenue. And then they also use the fees, the spot fees, to buy back and burn the hype token. So they're creating some scarcity, they're taking it off the market. So it creates some sort of positive price action. So this is already very impressive numbers for launching in November. So peak daily trading volume 10.4, it has 12x on Binance, revenue 7 days 12.8 million, Binance 40 million. So yeah, I mean, these are impressive numbers for an app that's only been out and live since November, and they don't even have their layer 1 live. So yeah, so the EVM isn't live yet, and there's already apps building on the, for when it goes live. Here's a list of them right over here. Okay, there's a lot more. You can see the new projects. And yeah, so that's basically what sums up Hyperliquid. And so what many people are thinking in the future, as institutions are entering right now, they're going to start basically assessing different projects by revenue created. That's what value investors do. They say, how much revenue is this company making? And is the business going to scale? And if it scales, how much is it going to make? So a lot of crypto projects, why TradFi doesn't like crypto is because it's all hopium, and a lot of them make these promises and they never generate revenue. Okay. Hyperliquid is already generating revenue, so it should, in theory, start getting the attention of large investors. And yeah, some of it is basically, execution risk. Like, it might not they might not fulfill all their promises, but their early numbers are extremely impressive. It's already getting so much attention. There's going to be a season 2 airdrop. They're very, very quick in adding new assets, much quicker than a centralized exchange like Coinbase. When Trump and Millennia launched, they were able to add those assets to the platform and generate revenue that way because they're lean and quick. So it's a lot easier for them to add assets. There's no bureaucracy or anything like that. So because of all this, I think it's definitely a project you want to watch. Now, the FDV currently sits at 23.6 billion, while its market cap is at 7.8 billion, so about 3x. But the difference here compared to like a SUI or something like that is that it's not going to VCs. They're going to do an airdrop to the community. Okay, so they're going to reward the community again. So in the near term, this is bullish. In the long term, maybe it's bearish because there's tokens locked up. It's easier to pump the price. Okay. So because these tokens are locked away, they're doing buy and burns and locking them away as well. This has a decent amount of upside left in the price action. So the question is, can it reach 100 billion market cap, which is where BNB is and where Solana is? And I think it can because it's already captured, it's already generating top 10 in revenue and fees, more than a lot of other L1s out there, more than like AVAX and stuff. So because of that, it's already created product market fit. It's only going to attract more attention and liquidity, more builders, and it's going to create, an innovation flywheel in theory. So that's pretty much it, guys. Let me know what you guys think. Are you invested in Hyperliquid? Well, actually, let's take a look at the charts right here. It's been one of the most bullish charts in crypto. It's basically been consolidating. Today, it rallied, but it seems to have reversed with the rest of the market. I think we had a little rally today, but a lot of the coins are kind of reversing right now. But as far as charts go, lots of alts have pulled back significantly. And Hyperliquid has basically held its ground. And again, it's in this consolidation range. It's in this consolidation pattern. The low was 18 recently. It's bounced back since, but I've seen it get sold down and then people buy it up relatively quickly. Shortly thereafter, we have this volatility squeeze shading right over here. We had a big breakout arrow, but again, it's reversed a little bit. We're kind of in bearish market conditions, so it's hard to sustain a pump. But as far as like a project goes where I feel comfortable buying and holding it, Hyperliquid is something I think it's worth looking at. I bought some and I'm staking it. Apparently, stakers are going to get airdrops and rewards in the future. That's all speculation, but I'm taking the chance there. But I was looking for an asset that I was willing to kind of willingly hold through all this chop, because I think we're in a chop market. And I think Hyperliquid is a big candidate for when the market turns around, that it could have a crazy rally. Now, what's the price prediction? I think in the near term, end of Q1 or end of Q2, I think we could see $50 hype. And again, the reason I say end of Q1, end of Q2 is because we are in a chop market and there's no clear catalyst. Everything is bearish. So we'll probably get a lot of rallies and sell-offs until we get some sort of dovish kind of FOMC from Jerome, or maybe Trump convinces Jerome to start cutting rates or something like that. But until then, we're probably going to struggle to sustain a pump in crypto. But again, as far as an asset that I am willing to hold that has a lot of catalysts in this chop market, I think Hyperliquid is definitely up there, and I am farming the airdrop. I'm going to make another video, basically how to farm the airdrop and position yourself to get the airdrop for Hyperliquid. So thank you guys for watching. Please like and subscribe and have a good day. On this dashboard as well,